Welcome back to the Future Show here on the TD Ameritrade Network. I'm your host, Ben Lichtenstein. For the break, we took a look at the ES, the NASDAQ, the Dow, the Russell, the indices. We looked at how they've been, well, settling into a bit of a holding pattern ahead of the non-farm payrolls data scheduled for release Friday. And while stock index futures products have been somewhat dormant, the energies have slipped into a bit of a comfort zone as well. Crude WTI holding between 53 and 57, the Brent between 63 and 67, but with inventories on the calendar, a strong U.S. dollar nearing 2018 highs, and OPEC meeting rapidly approaching. Don't get lulled into a false sense of complacency. Traders, we've asked the chief market strategist at Agora Financial, that's Alan Nuckman, to join us live from the floor of the CME Group. He's joining us here from Chicago. Alan, good to have you back with us. Alan, let's begin with the inventories. Good morning to you. Let's begin with the inventories because yesterday the API on the close reported a build of 7.2. Last week they had a draw of 4.2. The EIA reported last week a draw of 8.6, but this week they're looking for a build of 1.2. Alan, with inventories all over the place like this, it's no wonder crude is been somewhat range bound and a bit of a chop recently.
Yeah, you're seeing some volatility in the numbers, but it really hasn't been an issue here lately because the market's not moving on fundamentals. I'm looking for some more momentum here, and we've stalled out near this top. But let's remember that just in the last few sessions, we posted the highest level here in oil since in 2019, and it's been a 30% move off those lows that we had at the end of December.
Now, Alan, crude has been nosediving. You mentioned into that 42 low, the end of December, but it came off that 77 level. This was in reaction to OPEC as they decided again that they were going to cut some supply from the market. The market firmed up after selling off to 42. Now, I'm wondering what you've been hearing related to these production cuts. I've heard that the cuts have been actually larger than initially promised. I heard compliance was widespread, at times over-compliant, to the tune of possibly more like 1.7.
Right. Now, overcompliance is a new word to me, but we've been reading the same information here. So it is interesting. We're seeing it in the price action. And what I view very much a positive here is that the pullbacks have been very modest. And when they do pull back, we rally and make some new relative highs each and every time. So I'm still looking at that 60 level. We haven't gotten there yet. 60 is a halfway mark of that high to low that you just referred to. And so it'll be interesting to see if we can get to that midpoint pivot. Now, in the S&P, we did that many, many weeks ago, and we've been above that pivot since that time, and it's been, up and away when you look at the market. So when I talk crude, I think we have to focus on what stocks are doing. I think there's very much a correlation there. They bottomed at the exact same time. They both made bullish diversions technically at the same time, whereas they made new lows but not new highs in volatility, and it's been up and away, like I said, since then. So let's see. I don't know who's going to be the leader for this next leg higher. Like we've talked about before, I'm more in the how business, how the market's going to move instead of what's going to be the next catalyst. I'm not so sure what's going to give it a push to the upside, but I'm looking for another test to that 60 level, and we'll have to wait and see.
Well, we'll keep an eye on that. Potentially, we could see, Alan, that next leg up come from next week's OPEC meeting. I'm wondering if you've heard any details, if we should expect anything kind of a ground shaking to come from.
Well, like I've said many times before, OPEC has been in this game for a while. They've got a pretty good handle on how to play things, how to leak information, how to kind of guide price a bit. The cartel's not dead, so let's remember that. There are three major producers, that we have to focus on: Saudi Arabia, U.S., and Russia. But they do craft a pretty solid message. We're going to focus, obviously, on the dollar. We just had the ADP numbers come out, and they were right in line with expectations, but they did revise upward their January numbers. So let's see what that means next. But I know you're going to bring it up, so let's talk about the dollar. The dollar's still stuck between 95 and 97. It looked like last week it was going to take that dive that we've been looking for when it was solidly below 96, but it just can't break. So, I can look at that as a positive, that even though the dollar is holding up at its highs, we have also seen crude oil and the stock market maintain their overall upward trend.
Alan, let's keep that dollar versus crude discussion going here. You said you knew I was going there, and I was. You're right. I'm wondering, at what point does a strong dollar create headwinds for crude? As of yet, it really has yet to.
We'll know it when we see it, but it hasn't done so. And looking at interest rates, you talked about what happened last February in the markets and that kind of volatility, but let's look at interest rates. Interest rates, if you look at the 10-year note as your barometer, interest rates are below where we were at this time last year. So we had that rally, we had the scare, the spook. Everybody was worried that this was it, rates up, going to continue to go higher, inflation concerns and so forth, but that never materialized. So you can see the rates are lower. We're not raising rates at all in 2019 if you look at the futures markets. So, that's going to be hard for the dollar to continue to strengthen, even though it has drifted higher because we have not seen the other components in the basket really bounce. We've seen the British pound rally a bit, but we haven't seen the euro, get back up to that 115 level. So it's just kind of holding its ground. Let's talk about global growth slowing. I know that was your whole first segment. Mm-hmm. Your whole first segment was, but the concept here is growth slowing. Tell me something I don't know. We've been talking about it for 6 months, and you can see that China Shanghai is still up 20% in 2019. So yes, growth might slow to 6% GDP in China. Okay, might, and 6% is double what we have. So I think the concerns have been digested by the market, and we're looking forward. Yes.
Yeah. Alan, I want to get into gasoline discussion here because, while crude oil for the most part has been coming off, one thing that's going to start to be coming into focus here is gasoline prices. We're ramping up into the summer driving season the next couple weeks. I've been watching some draws in inventories, and we've been hearing about how refiners are going to start to have a bit more of an appetite for crude oil. How closely are you watching gasoline inventories as we head into spring and summer months here now?
Well, that's always the issue, right? Crude oil itself doesn't do anything. It's got to be broken down and so forth. So let's see what happens with the components and see if that can add some support. Refiners typically have been, kind of on a fine line as far as that switch over, that transition, which always mean that there's a price pop potential, especially in the crude market geopolitically, but also from the physical standpoint of the refining standpoint. If there's any disruptions or any issues, what does that do? That firms the market very, very quickly because, they're again on that just-in-time inventory type mentality, that's always something that can be an underlying support when it comes to crude. I want to get back to stocks. I know you're going to say it's not as related to crude as people may think, but look at the S&P. The S&P stall at 2820. That was the high in October, November, December. We were unable to get through that. So that's why we've it used to be fast and furious in the crude market and the stock market. Now it's kind of quiet and calm right now, but that will change. Let's see what the next move is. A pop above that 2820 level can send stocks close to their highs. And I know this is not a direct correlation or causation, however you want to look at this, but I'm focusing on Apple stock. If Apple stock gets back to the 185, 190 level, that's the halfway point of that drop. And if we get back above that, then that's a very positive sign for stocks in general. And that could be one of the catalysts that takes all these macro markets higher as confidence builds once again.
All right, well, then sounds like we've got to keep a close eye on the December, the November, and the October highs in the ES. We'll keep a close eye on the correlation between the two, the crude and the ES. Alan, really appreciate you coming on this morning and really breaking it down here in terms of some of the complexities that energy traders are faced here as far as the indices and demand and inventories as well. We kind of only scratched on the surface there, but the dollar as well. Alan, really appreciate it. Thanks for joining us here this morning. Traders, that's Alan Nuckman. He's joining us from Agora Financial. Now, I want to kind of move away from the energy